Hi there and welcome to this symposium on the 11th of December 2017. I apologize for not doing these last week, but I had some internet issues last week, and so every time I tried to do them, I got kicked off, and so I had to ultimately stop doing them. So things seem to have been resolved, and so now I'm going to have a quick look at a few pairs. I hear a lot of people talking about wanting to trade on the smaller time frame, and while I completely understand that is a pretty attractive way to trade, number one, because your risk exposure is limited, you're not exposed to or necessarily exposed to overnight risk, and also number two, then at the end of the day you already pretty much know how you're performing for that given day. That said, I think it's worth mentioning, or rather reiterating, the importance of returning to the higher time frames just so that you know where you are in relation to major supply and demand. And I've made this extra indicator, which some of you may or may not be using, which is really good for this. And so I'm just going to show you what it looks like very quickly. I know a lot of you are already using it, but I just want to show this quickly because it's important. I'm going to take the supply and demand indicator off just for a moment, and I'm going to show this one here. So why is this indicator interesting to us? Well, it's interesting to us because it enables us to identify macro supply and demand on smaller time frames. So you can see here we are on the daily chart, but you can see weekly and monthly price action on this chart, and it does look a little bit choppy and ugly and cluttered, but if you try and look away from the fact that it's cluttered and just focus on these major turning points here, I think it becomes pretty clear what's going on. We have two price imbalance candles on the monthly candles. Then you ask yourself the question, well, where did this price push, the price imbalance originate from? Well, it originated from down here, and you can see that we actually have the top of the month where all of this started, which is here. This is an accumulation candle. You can see the white top, and the bottom of the candle goes just here where this red dotted line is. So this is an accumulation candle, and for this month the wick went down to here. So we have the lower shadow goes down to here, and the higher shadow goes up to here. The high is here. So we have an accumulation candle right here. What does that mean? Well, that means that we are very, very likely going to get a reaction when price comes down into here somewhere. So when price approaches this area here, we're probably going to have a bit of a bounce. And so this is where this stuff is interesting, because then you're not simply looking at the 50-minute or the 30-minute or the 1 hour or the 1 minute or whatever, but you're also focusing on this stuff. And so knowing this, you take this information down with you to the smaller time frames, and you wait for price to approach here, this area of monthly demand, and then you buy into it as micro areas of demand form within this monthly area of demand. And given that, I mean, on the monthly chart, price could feed into this area and kind of hang around in the area for 1, 2, or 3, or 4 months even. But within that period of monthly consolidation, you're going to see a lot of moves higher and lower on these smaller time frames. So if you're looking to trade on the 1 hour chart or the half an hour chart, you wait for price to move down into here, and then you go to your smaller time frames, and then you can simply look for price forming areas of demand below price. And this is good because, I mean, obviously you will not be selling at any point in the near future, because you will simply be selling into monthly demand, which is a really bad idea. And we know that we have a very high likelihood of institutional orders, limit orders nesting around this area here. And so we're probably going to see some people look to begin to buy again once it approaches this area here. And so it's a tremendous tool. And the way that I use it is I scan pairs like this. So I'll go like this, and I'll have a look. And on this chart here, you can see that we're kind of reaching, the monthly chart has been drifting higher. We're kind of having a bit of a sell-off. We're kind of moving sideways, drifting sideways. But within that, you can see on the weekly chart that we have two price imbalance candles here, and the origin of that move is just here. So we had the week came down, we had accumulation candle here, another one here, and then this candle moved above and closed above the highs of these two accumulation candles. And if you look in here a little bit closer, you can see that it all originated from kind of this, oops, sorry about that, it all originated from kind of something in here, like around here. So something in here is causing that. There was a lot of buying pressure that was built up once price kind of left this area here. So we can anticipate a similar reaction once price returns here into the future. This is higher probability, this is higher risk, this is lower risk. So here we had divergence, which likely occurred. So if we have an oscillator, we probably had like a mirror picture of this happening on the oscillator, then price left, and so we're probably going to get some reactions initially here and initially thereafter down here once price manages to consume this area here. But I'm thinking there's going to be a pretty nice room for a bit of a bounce here, and you can see this accumulation candle here, and you could move this and say, well, I want to go for a buy here, and you can look at this whole area here. This is a buy zone just here. Why? We have a major swing high. This is a weekly swing high. We formed this low, we accumulated, and then price managed to trade above this high here. And so if price, once price returns back to here, which it will, we're definitely going to see some people begin to enter the market and to buy. And so you can certainly look for that to happen down here. We have a look. I'm going to go back to the daily chart. I'm just going to skim through a bunch of these. We had that one. We've got this one here. We had this that went on. We had this this period when price accumulated, rallied, accumulated for 2 periods. We kind of drifted high here. There wasn't a lot of a follow through on the monthly chart, but on the weekly chart we had a lot going on. You can see that we had 1, 2 price imbalance candles here. The origin of these moves was just down here. So we had this weekly accumulation candle, and I've pretty much just boxed this whole weekly accumulation candle on, and this is my daily entry. And of course this allows me fewer lots, so just under 10 lots. We can expect this to wriggle higher. I would have been really pleased if price would have moved above this high here before it returned, which it didn't. So this is making me rethink this trade. So I'm going to manage this probably a little bit more aggressively once price comes back down here and potentially scratch the trade. We'll have to wait and see, but I think we're probably going to get a reaction in here. Let's keep moving. Look at the dollar CAD. What's going on here? Well, where do we have these strong moves? Well, look here, price came down, accumulation, extended range candle, price imbalance candle, and it kind of originated from around here. This is like, you can see how this green top weekly candle here kind of left this area of accumulation. I'm targeting the very low area of this candle here for an entry. If we have a look at it, you can see that it originates down here. So this is the daily candle. This is actually a daily accumulation, and then this is a candle that left, and this candle managed to trade above and beyond this high here. So this is a natural place to look to target for a buy here. What I don't like about it is that price has already been back to this level historically. The only fresh area is actually down here, so I might consider doing something like this. I'll just do this just for the time being so you can see, because this is of course going to bring our entry below these tests, because when price goes up and then returns, it's cleaning out liquidity, but there have been no pullbacks below this low here. So this is of course slightly more favorable than this here for that exact reason. You can see that we're kind of moving sideways. We're trading between the high of this candle, this weekly candle, and kind of the upper range of these weekly candles here. So price is kind of moving between these two extremes for the time being. So this is kind of a range bound market for the time being. If we have a look at a few other pairs, we have the dollar franc. What do we have here? Well, we have price kind of wriggling lower here, and then we had a nice push away, nice monthly push away, which is great because it shows us where the edge of the area is. You can see we have our accumulation. We have the top there, top top there, and then price cut away. So this is a really nice area here that we can expect price to react at some point. Not here, but maybe something in here. You can see how price rallied, it came back, and then it rallied and came back. This is not very clear. I don't trade the dollar Swiss franc because it's a bit of a risky pair, but I like what this candle did here. We really managed to move above here, but what we didn't do is we didn't manage to move above and beyond any opposing supply here. So price is looking kind of range bound, maybe wriggling low. If we have a look here, yeah, it's pretty range bound. We're stuck between kind of these levels here and up here. So we're kind of trading between these two here. So knowing that, you want to be selling at the tops here and buying at the bottom here for the shorter term. They remove all of these. But not really a pair I'm interested in, the Swissy. Let's go to the next one here. We have a look here. We are on the dollar yen. This is the daily chart. And what's going on? We're looking pretty range bound, aren't we? Just moving up and down. We have this nice sell-off here. See how price went up, then we came back very quickly. Let's adjust. Let's put this back a little bit more. Let's go back a couple months. We can see a little bit more. Actually, let's just go to the monthly chart. You can see we're kind of feeding off these up here, up around here. So this, we have resistance just here. Price has not really done anything. I missed an entry we had down here, but price is still drifting higher, but it's not really doing anything for the time being. Go to the weekly chart. You can see that we actually have something very interesting down here. We have that really nice push away, which we like. You can see we have accumulation candles just down here. If we go to the daily chart, we can have a closer look at those, and you can see that this is what they look like. We had accumulation, almost accumulation, and then price went north. And what I'm targeting here for an entry is this lovely area. Missed it. I'm leaving this on because I think price will come back to there and have a test there. Just a really nice area. We had two extended range price imbalances here within this monthly price imbalance, and so I really like this area here. This is just a really nice continuation pattern here. But for the time being, it's kind of a sit on your hands unless you're on the smaller time frames. We have a look here. We're just going to go through a couple here. You can see we have a nice monthly push higher. When it left here, we managed to move above this high here, and so we have the origin of this move is down here somewhere. So we're expecting price to have a bit of a reaction once it comes back down here. You can also see here we have weekly. We have the weekly candle here, green top candle, price imbalance, accumulation, and then price started to leave. So we could have an entry that looked something like this. So the entry just up here, the stop just around there, and an anticipation that price is going to drift high, because now we're paying attention to the major swings, so the monthly chart from within the daily chart. Another thing that's really important that I want to touch on, just going to put another chart on to talk about this, and this is choosing the wrong supply and demand areas, because this is super important. Let's assume for a second this here. You can see how market flow on the Euro US dollar on the 4-hour chart is going down here. What does that mean? This is actually kind of one of those small details that you will really appreciate that you get right. If market flow is down like this, here we have price came down and it went up pretty quickly. Does that mean that you want to buy here? It really doesn't. When price starts to move to trade lower like this, you no longer want to buy at leading edge. You don't want to buy here or here or here or here. You want to wait until price reaches opposing demand, which is defined on the leg higher. We have some here. I bought here. I bought at the 57 area here. I bought here, right there, was it Friday of last week. Because of this, I didn't expect price to react here, because price, you could see that we had 4-hour supply being respected and 4-hour demand being consumed. That means that you want to look at greater period demand to buy. So you don't want to buy any more down here. You want to wait for price to return to demand on the opposing side of the market, which will be the leg on which this price structure is standing on. So until price comes back down to here, this is fresh. So we had a test here. And once this is gone, the next one is down here. We don't take this one again because price has already been back to here once, twice, and this is the only one that is fresh and untested. So you want to look left on this. Let me see if I can find a better example. I mean, we have another one here actually. If you see this, I mean, we have the highs going lower. That means that we have supply being respected and demand being consumed by the opposing order flows. That means be careful when buying, because you would see this and you would think, good, well, I want to buy here. Not a good idea, because price will typically move through those and it'll return to the demand that this price structure is standing on, which is down here. This also tells us something a little bit about the fact, well, in this situation, this is a child and this is the parent. So this is not demand, this is a reaction to the demand being here. So price simply returned to demand for the second time. First test, second test, third test, so the third test. And then it finally cut through it. And so when you start to see the highs getting lower and the lows getting lower, make sure that you look much further back and you find the price structure on which this move lower is standing on, and target that for your entries and not bleeding edge price. Hope that makes sense. That's pretty important. Okay, let's have another look at some other pairs of euro pound here. This is really interesting. You can see how price managed to go up. We went up, we had a really pull high, and then we sold off. This is great because we have a price imbalance candle on the monthly chart that left, and it left here. What does that mean? Well, that means that price is probably going to have a tough time moving through this. We don't have any accumulation candles up here on the monthly chart because price left too quickly. If we have a look at this on the monthly chart, you'll see a bearish engulfing pattern. You see here, price rallied, and we have this whole candle kind of covered the body of the previous candle. So this is a very bearish sign, very bearish sign. And so you want to sell, and you want to target your entry towards the top here. And if we have a closer look at that, you can see that we have the green candle that left. So which candle left the area? This one did. We have an accumulation candle. Is the body of this one in the range of the previous? No, it's not. Is the body of this one in the range of the previous? Yes, it is. So we're probably going to have, excuse me, price is going to come back to something like that. I'm thinking it's going to come back to this just here. See, we have a kind of the parent, child, older brother, younger brother, youngest brother, and so these are all linked together. And so what you can do is just box off the whole area like so, and which is what I've done, and just kind of write it out. But I'm expecting price to have a bit of a test there on its way lower. Good. Let's have a look. The euro yen, what's going on there? Well, if you look here, I mean, there's not a lot going on. We zoom out a lot. I mean, what's going on? Well, there's nothing really going on. There's nothing. There's no supply here. What you can see that we have. It looks like we're stuck. So what we want to do here is we are moving higher, so we're expecting price to continue moving higher, but we don't have a breakout for the time being. So we want price to, let's go over here, it's a bit clearer. We want price to leave this range. You can see we're stuck between this demand and this supply. We want demand to break above, and once it does, then you target roughly this area of supply, which will, resistance becomes support as an entry, and then move through. What you'll notice is price, if price is going to move through, it's going to start. Let's have a look if we have the signs of price moving through. Okay, we have this, which has been tested once. We sold this a while ago. I think I put it in a symposium or on the Instagram account. I think it was on the Instagram account. And then price actually I sold down here on the daily level, and price went to the 4-hour level. But now you can see that price is respecting this demand. We have these solid edged rectangles, which means that we have respect, and we have dotted boxes to the upside, which means they've been tested, which means they are weaker. So we have the strength is down here, the weakness, a risk is to the upside, and so we're expecting price to continue drifting higher. What you want to do is, when you can see that price is rallying, accumulating. Once price rallies and begins to accumulate just below an area of supply, this is a pretty good indication that it's accumulating liquidity, filling orders, bullish orders to move through that area of supply. Now we're not seeing that picture just yet because we are seeing some detracing going on, and this is because the price has to return to parity. But we are seeing what appears to be the beginning of a move higher beyond this area of non-fresh supply. So we'll have to wait and see, but I'm expecting price to move through this just by looking at what price is doing now. Okay, let's have a look at the pound yen. Zoom out. What do we have here? We have the same thing. We have this really nice push higher monthly chart. The origin of it is down here, and you can see that we have this weekly. So this whole week of trading was actually pretty much the entire volume for this entire month. So the second week of August, September, the second week of September was where the pound yen moved the most. The first week we didn't do anything. The second and third week we did nothing either. It was the second week, and price moved up very quickly. And what do? We traded above and beyond all of these highs here. And the area of demand that caused that, so the strength of this move originates from down here. And so this is ideally where we want to enter to buy in anticipation that price continues moving higher. Okay, let's have a look at the Kiwi. What's going on in the Kiwi? Let's zoom out a little bit. You can see that. Let's go over here. What's going on here? Well, price is, we're testing supply for the second time. It's holding it for the time being. We've managed to move below here. You can see there's a little X telling us that this demand has been consumed by what? By this. So we can expect price to come back to roughly this area here and have a test at the 7200 area and potentially continue lower. Consider the fact that we have monthly supply driving price. That means you want to be selling. We have a sell-off, accumulation sell-off. We move below this low here. So now we're feeding into the liquidity and beginning to consume down here. It looks like we've found some buyers. So price is going to return up to back to a point of equilibrium, which is roughly around this accumulation, because this is where the origin of this price inefficiency, this price imbalance started. So we're expecting price to return back to here, and then maybe wriggle down to here to this monthly demand. But we do have this, which is untested. We still have this price imbalance that needs to return to parity, which it has not done. But so I mean, price can pretty much do anything for the time being. But there's no real demand in here. We go to the weekly chart, have a look. You can see that we have a different picture. We have this really nice weekly area just here, and this is a very clear demand on the weekly chart. Price left. We managed to trade above and beyond the highs, the previous highs. We consume this this supply here. So this is a pretty nice area to target for. The first time price came back, look how many people started buying, a lot. And so if we get, the closer we get to this, the more comfortable we'll be in buying it down here. So hopefully price will come up here, have a test, and come back down here, have another test, and have a bounce before it either goes higher or lower. But in the meantime, once it comes back into here, well, then I think we can certainly manage a decent trade out of that. Okay, let's have a look at the Aussie yen. What's going on? Well, you can see that yeah, price is starting to, we're starting to form this round top and begin to kind of turn around. We're getting like lower highs, and so I would feel less comfortable trading this, and I would feel more comfortable trading this, the origin of this this price imbalance here. Because once price starts to move up like that, you don't want to be buying down here, and you want to be careful buying this because price has already been back down to this level. This is fresh, uncharted market territory here. Price has not been back here. As you can see, we have black space since the release, and so I'm thinking once price comes here, we're going to have a nice move higher in the continuating higher. Continuating. That's kind of a weird word. All these languages mixing together. So I think this is nice. You could probably get a nice little one out of here too, if we have a look. Yeah, and there, you know what? There's a pretty nice one right there. I like this. Right there. What level's that? That's at the 84.50 area. Let's look at it here. 84.50, 84.50. Mm. 84.50. Around here-ish. Yeah, around here. Daily. Here it is. Just around here. So this is what we're looking at. Around there. Ish. Oh, we've already tested it by the looks of it. And yeah, so price has already fed into it. Now we're starting to, come on. Kind of, yeah, it looks like we've already fed into it, so this is kind of already gone. This is a really nice example. We had price moving down. We had divergence here. The price moved away. We moved back to the demand that managed to move above these two micro supply and this supply here, and this is where price is drifting higher. So here we have a really nice price movement. Price is wriggling high from here. I don't know why I've got that there. I prefer that up there. Looks pretty nice. I think if price manages to come back up here, we're probably going to move back up into here and have a bit of a bounce. Selling the Aussie is not necessarily a good idea, especially against currencies such as the yen, because of the interest rate swaps. So keep that in mind if you're doing big positions. Okay, let's have a look at another one. I'm just going to remove all these objects because I've got lots of lines and stuff. Good, so we'll go back to the daily chart. So what's going? What do we have? Well, we have very clearly a bullish trend. So we ask yourself, what do we have here? We have a continuation pattern. Look at that. Rally, accumulation, rally. Rally, accumulation, rally. Which one's closer to price? This one is. Which one do you take? The one that's closest to price. So we go like this. Just going to click on this. Got to find out where it is. It's difficult to see. I mean, on the daily chart, you can see it. It jumps out at you there, but it's a bit difficult to see there, isn't it? You can see, yeah, we have weekly demand here, but it's a bit difficult. So I like to do is like to have these charts next to each other like so. Then I'll simply mark them off. Okay, where is this one? So we are at 65.82. 65.82. $65.82. So we're around here. It's really difficult to see actually. 65.82. 65. Yeah, so right around here. So this is where it is roughly. And that brings us pretty close to this. The indicator is telling us where it is. We have a nice daily demand. I like that very much. Why? Because, you know what? I'm just going to do this very quickly. I'm just going to put both indicators on the same window. We'll put that like that. Save template. We're going to save it as that, and we're going to remove, actually we've got to remove all these rectangles, otherwise we're going to go crazy looking at those. Turn this off. That's better. So now we can see that, and now we can mark off the area. So now we would mark it off like this on the monthly chart, but we're not on the monthly chart, are we? We're on the daily chart, and the area of daily demand that caused price to break away and form this this monthly candle is here, like we saw previously. So we have like this. You put the low below the low of the candle, and there you are. Now you're set. You've got a pretty good entry there. The 65, 36-ish, 30 area. If we go to tightly like that, 35, 30ish. That looks pretty interesting, and yeah, so I like that very much. We have another weekly one here within this, and this one is important, very important actually, because demand here moved price above this high. You see how it traded above that. So we also have a very important one down here. So you can mark that off like so, like that. You've got another one there. It's been tested once. Great area. What else do we have? Well, we have a few other things as well, but these are the ones that are closest to price, so I think I'll focus on these. But this one's okay. This one's pretty good. It's been tested once. Keep that in mind. But when price starts to sell and move lower from here, it's going to draw something. So if you have like, I'm just going to do like this. Price is going like that. Once it starts doing this, don't start buying. Don't try to buy here. Look at the leg that this whole price structure is standing on and focus on the major opposing demand, supply and demand, which is down here. So you'll be buying here and not at these, because your price is easily going to cut through those. You're going to consume that. So you want to be selling. And so what area did that? You want to sell up here. This one's gone, what area consume that? This one here is going to be selling at this one and follow price low. You don't want to be buying at these ones. Once we have supply being respected and is moving lower, you want to be looking at the major leg that this whole price structure is standing on. So really keep that in mind. I think that alone will keep you out of a lot of trouble. Super. Good. Okay, let's do. Actually, it's a pretty nice one. Oops. It's a pretty nice combination of indicators, this, I think. I'm just going to turn this off, save the template. I'm just going to save it once more, save template, default plus intra candles. Now we can drag, and we have both of them on the same chart. That's great. Ooh, messy, don't want to touch it. That's nice, that's nice. And yeah, you can see where are the big candles that move away. We have that nice green one here. Where does it originate from? Just here. So this might be interesting. We have a small accumulation candle just here. We zoom in a little, we can see what's going on, and we have rally, accumulation. We have 3 weeks of accumulation, then a break higher. And so ideally you'll probably find that price will kind of have a first reaction like right here, which is like at the high, kind of the high of the highest body in this area of accumulation. It's pretty close, and now it's probably going to keep moving down. You don't want to buy here because it's too close. I mean, we have market flow against us, so supply is being respected, demand consumed. So you want to be focusing on the stuff over here. This is definitely where you want to be focusing on. So when we have that there, we'll just do a couple more before we wrap things up. What else? What do we have here? We have a nice green candle moved above this high here. The origin of this move is somewhere around here. We have a rally, 1, 2. We have 2-3 weeks of accumulation, then price left. We didn't move. It wasn't a very convincing one, but look at this accumulation candle. Where did price come back to? The accumulation candle. They're pretty phenomenal, these accumulation candles. But now price is starting to sell off pretty quickly here. Yeah, so maybe wait for price to come back down around here. I wouldn't fiddle too much with this simply because of the rate at which price left. It wasn't very fast. I'm going to run through a couple of these. Yeah, nice push higher here. We had this weekly candle that happened during the last week of this month, and the entry for this one is right at the base. So the accumulation, the accumulation candle just prior to this release, which is just around here. I like that. So we'll have to see. It's lower than the lowest swing low, which is good. So this is uncharted waters, which is great. I don't trade the Euro franc either. The pound Aussie. What do we have here? Well, we have price drifting higher. Clearly, we're moving above these highs. We have an upward sloping trend line, low, high, higher, low, higher, high, upward sloping trend line, buy demand. We have monthly accumulation, so price will probably come back down into here somewhere and have a bit of a bounce. We have the big wick. You can see that the body of this candle is here. There's no wick above, so we have actually a doji. Not a doji, but we have like the body at the top and we have the shadow below. So you could target something down here, for example, around here for an entry, because this is kind of, I kind of refer to these kind of a slingshot where you have price and it's kind of pulled back and it's like let go, kind of a slingshot, and it flies up, and that area of demand that you target for an entry is normally within the wick of this candle, which it is. I mean, here we have the monthly candle, we have the wick, and this is positioned very nicely kind of in the lower end of the wick. So you put the stop a little bit further down, you have uncharted waters. Alternatively, you have this down here, which is a nice daily continuation pattern just there at the 65.70 as well. And then this is completely fresh. Price has not been back here at all. I prefer this than I do any of this stuff up here. Okay, pound Kiwi, a couple more. What's going on here? Yeah, well, what do we have? We have something here which looks nice down here. A lot of trading in here. This is a little bit better. A rally, one period of accumulation on the weekly chart, then a push higher. Accumulation just below this low, then price popped up. So we might get some reactions down here, but you can see that price has been back to this low here, and so I wouldn't want to pay anything more expensive than the 83.25 for this pair, which brings us down to here, which is a little bit better. Last pair, the Kiwi Japanese Yen. What do we have here? Well, we have a high monthly high, actually a higher monthly high, and yeah, it looks like this is going to move high. We have a high, a higher high, we have a high, a low, a higher high, and a higher low. So if price manages to wriggle higher from here, that might be pretty interesting. And we don't have any strong moves away from here. We do have some supply in here a little bit. 2 periods of accumulation on the weekly chart. Price popped lower, we traded below this, so this is interesting. Probably going to have maybe a bit of a struggle to get through there, maybe not, but if you look left you can see the price has already been back to these levels. Look at all these wicks here. The only area that hasn't been tested is kind of this stuff up here, so I'd feel more comfortable looking up here around the 80 area, on the 80 area, kind of around here, kind of that. I mean, you don't want to really pay anything, sell it for a price any cheaper than the high of this test, because this is where the uncharted waters, the fresh liquidity is located. Excuse me. And so, yeah, that's what I think about that. Cool. Well, I'll leave it at that. But I hope you see value in this indicator. It's a tremendous tool. It's an amazing filtering tool. It enables you to filter stuff as quick as that. Cryptocurrencies, whatever you like. You can see very, very quickly what you should be doing and where just by looking at this. Green candle, get in here. Green candle, get in down here. The trade already happened. Green candle, get in down here, or in down here. The slingshot, you know, it got pulled back. The elastic, it's released. It's down here. Dash coin, American dollar. This is so obvious. Honestly, would you want to buy now? No, you want to wait for price to return to equilibrium, which is down here. It might take a while to get there, but we're probably going to get there. We have Bitcoin, American dollar, same thing. This thing is unbelievable. I mean, look at this. It's done nothing but go up. You go to smaller time frames, you can find these areas. We have this one looks pretty interesting too, down here at the base, somewhere in here. Yeah, we'll see. It's the cryptocurrencies are on fire at the moment, it seems. Anyway, but check this tool out. Combine it with your with the supply and demand indicator, and just play with it, and I hope it helps. And if you want me to look at anything during the next symposium, please let me know, and I'll be thrilled to do so. Okay, thank you very much. If you have any questions, please post them in the River forum. Thank you very much.